Ladies and gentlemen, Panda Trader here. Welcome back. Today we are not looking at one single session. We are building our complete game for the week ahead. In this video, we will look back at what happened last week. We will find where the important levels are sitting right now, and we will build a trading plan using the weekly, the daily, the 4-hour, and the 1-hour chart. Okay, let's get started. Right now, gold is sitting inside a correction. After a long bullish run, price reached a major high, and since then, it has been pulling back for several months. Looking at the most recent candles right here, the market looks like it is ranging than pushing cleaning in one direction. Last week, price opened close to the $4,000 area, moved inside a fairly tight range, and closed not far from where it started. Looking at the daily and the 4-hour charts together, last week was mostly at a ranging week without a strong directional push either up or down. Price is currently trading around the $4,045. On the weekly chart, we can see gold made a large move up, and starting from around $3,200, climbing all the way to a peak near $5,400. After that high was made, the weekly candles turned down hard, and since then, we have seen a clear series of lower highs and lower lows. After that tells us that this is a corrective structure on the higher time frame, not a fresh uptrend. In the last couple of months, the weekly candles have gotten smaller and the price looks like it is consolidating somewhere between around $4,000 and $4,200. I do not see a clearly marked premium or discount zone on this weekly chart, so I'm not going to label one. What I can say, just from the position of price on the chart, is that we are trading inside the lower part of the larger range between the low and the high, which supports the idea that the bigger picture is still corrective. For next week, the weekly chart is telling us to respect that we are inside a pullback, not inside a new uptrend, until the structure proves otherwise. Okay, moving to the daily chart, we can see the same story in more detail. Price fell from around $4,900 back in April, printing a clear series of low highs and lower lows, all the way down to a low near the $3,950 on July. That was the deepest point of this pullback that we can see on this time frame. Since that low, price has been ranging, moving between roughly $4,000 as support and near $4,200 as resistance repeatedly over the last several weeks. This tells us that the daily structure right now is more in a sideways than in a directional. And even though the broader daily trend since April has clearly been bearish, does the daily chart confirm the weekly bias? Yes, it does. Both time frames show a market correcting after a major high, and both are now consolidating rather than trending strongly in either direction. This is the most important part of the plan. On the 4-hour chart, we can see gold is moving inside a wide range, roughly between $3,960 on the low side and around $4,200 on the high side. Inside that range, we can see the several swings. Price put up toward around $4,180 in early July, then pulled back around near $3,960, rally up toward roughly $4,140 again, drop back to the similar low area, and then rally once more toward around $4,145 before turning down again. Notice something here, each swing high is slightly lower than the one before. This is a sign of the weakening bullish pressure inside the range. I do not see a clearly marked or breakup structure or change of character on this 4-hour chart, so I'm not going to label a specific one here, but based on the shape of the candles, the movement inside this range looks corrective, going back and forth rather than pushing cleanly higher or lower. This 4-hour picture agrees with what we saw on the daily and weekly charts. We are inside our range, leaning slightly bearish because of those lower highs, but it is not a strong, clean trend in either direction. Now here's where things get specific, because our 1-hour chart, we have some already important areas marked for us. On the 1-hour chart, we can see a clear breakup structure early on, followed by several changes of character as price step lower, swing by swing. That downward move eventually reached an order block area marked between roughly $4,000 and $4,022. The sun acted as support. Price reacted from there and rallied hard on the way up into a premium zone, marked between roughly $4,150 and $4,166. That rally tagged a high close to $4,166, which lines up with at a 1.618 extension level marked on the chart. From there, price returned back down sharply, moving through $4,101 and $4,083 and down to a Fibo Zone marked between roughly $4,070 and $4,083. Price has since then pulled back close to that order block support again and is currently trading around near $4,045 right here. I do not see a volume profile marked on this chart, so I'm not going to preference one. I also do not see a specific liquidity label run here, only the structure level just described, so I will stick to those marked levels rather than guess at liquidity. Looking at the projection run on the chart, this suggests a possible path from current price back to the Fibo Zone around $4,070 to $4,083 and potentially further toward the $4,100 to $4,110 area if that zone gets reclaimed. A potential buying area based only on what is marked here sits down near the order block between $4,000 and $4,022. If price return there, a potential selling area sits up in the premium zone between $4,150 and $4,166. Since that is where the last strong rejection took place before acting on either area, I want to see confirmation, a clear reaction, or a change of character on a lower time frame. If price does not confirm this, I will not force anything. My main scenario for the next week is built around the order block right here, continuing to hold as support as long as price respects the zone between $4,000 to $4,020. I'm watching for a move back up through the Fibo Zone near $4,070 to $4,083, with the next objective sitting around $4,100 to $4,110. For this to play out, I want to see price hold above that order block with some kind of bullish reaction there, followed by a breakback above the recent lower highs we saw on the 4-hour chart. I'm calling this the main scenario because it lines up with the most recent reaction visible on the 1-hour chart, not because I'm predicting it with certainty. The alternative scenario is simple. If price tracks through the order block right here, below $4,000, that would invalidate the bullish idea for the week. In that case, the bias would shift back toward the downside, and I would be watching for a continuation lower rather than looking for buys. A clean break and close under that zone is what would tell me the plans have changed. There are a few things I will not do this week. I will not chase price in the middle of the range with no clear area to work from. I will not buy in the middle of range between the order block and the Fibo Zone right here, because that is not a high quality area. I will wait for price to reach either the support zone or the premium zone, and I will wait for a clear reaction there before doing anything. If price never reaches my area this week, I simply do not trade. There is no rule that says I have to be in the market every single day. Before I take any trade this week, I'm asking myself a few questions. Is the weekly bias, which is a broader correction, still valid? Does the daily bias still agree with it, meaning it is still ranging between $4,000 and $4,200? Has the 4-hour chart shown a clean reaction at the edge of its range, and has the 1-hour chart shown given a clear structure signal at either the order block or the premium zone? If all of these line up, then I consider taking a trade with proper confirmation. And as always, I want to remind you, wait for confirmation before entering anything. Always protect your capital and always use a stop loss. Nothing on this chart is guaranteed. This is not financial advice. It is simply how I read the charts and plan my week. This video is for educational purposes only. This is my complete trading plan for gold next week. Trade patiently, let the market come to your levels, and do not force anything that is not there. If you enjoy this kind of weekly breakdown, make sure to subscribe to the channel. I also post 1-hour updates during the week, so you can follow us as long as the plan develops. See you in the next video. Panda Trader signing off.